Thank you, Mark, and hello from London. There have been a few interesting weekly key reversals this past week. One particularly is running on and indeed behaving now like a soap opera, it seems. Let's deal with the easy ones first. We've had a weekly key reversal down in Paris milling wheat futures, and I'll speak on that a little bit more in a few moments. We've had weekly key reversals up in the SGX SICOM TSR 20 rubber futures contract, the Chinese CSI 300 index, though interestingly not in the Shanghai Composite nor the Chinex index. We've also had interesting weekly key reversals up in the Felix Semiconductor Index and the Emini S&P Future. Now, these last two were especially interesting as they were immediate countering weekly key reversals up, and I will discuss the Emini S&P Future in greater depth shortly. Okay, going back to Paris milling wheat, weekly key reversal down. As any of you who view or listen to my weekly grains videos will know, from a technical analysis point of view, the fall in the grain futures markets, with the exception of Minneapolis, has been a uniform action seen in Chicago, Kansas City, Paris, and London. I had been posing the general question across them all. Will the recent move lower, which we've hesitated now, translate into either a bullish type pattern, such as a double bottom, or into a bearish type pattern, such as a bearish halfway hesitation? Well, it may not be a leader, but Paris milling wheat is the first to show a further direction, on top of the moves we've already had. This past week's weekly key reversal down now opens the way for possible moves lower to targets for some bearish patterns in the 201.5 area, which we've already had, then 195.25 and potentially even 188.25 area. This is not a done deal, but it certainly is a strong indicator for potentially significant moves lower. Watch this space. Okay, so now to the soap opera known as the Emini S&P Futures contract. You'll remember from last week I then spoke of the weekly key reversal down the market had made a week earlier, that is now 2 weeks ago from now, right at the top then of the market. Prices followed on lower the following Monday, so that is 2 Mondays ago. Actually, seemingly all happened that day, with the lower open and a small follow-on lower further. The market then halted and started to revert back up. I had pointed out how this had happened nowhere near any support I had. Thus it seemed the move down on that Monday was enough for that weekly key reversal down, and I opined how the bullish incentive was still strong in this market. I quoted at the time, "It was much like a boxer taking a body blow that may wind him, but he is still standing and can keep fighting." Indeed, what we now have is the possibility of a weekly immediate countering key reversal up, with all that we've seen this week so far. If the market manages to edge up over the all-time high made last week at 42.67 and then close over 42.46, then we'd be on. And wouldn't that be a turn up for the books after last week's actions? Watch this one closely. End of quote. Well, you can see now it was a turn up for the books, as prices did indeed make an immediate countering weekly key reversal up last week. So what now? Well, all this action since mid-May may be a possible rising wedge pattern. Why am I pointing this out now? Well, because I think it will become hugely relevant, and soon. You see, we may be coming to a breakout. False or real, I'm not sure yet. We have a recently drawn upper rising wedge trend line, currently 42.81. This rising wedge pattern has become evident over the last few days, weeks even, and is close to a possible move as, depending on your count, we are either onto a fourth or fifth touching of the trend lines. For your information, we need at least 5 touches combined on both trend lines to have a true count. Now, 2 things I need to make you aware of, both important. Firstly, beware of false breaks. They are common in wedges and such patterns. so just be careful. Secondly, I cannot say as yet which trend line will break, though as you can see right now we're testing the upper rising trend line these past few days. However, I can give an idea of the size of the move higher, up, off or under the appropriate trend line when it breaks. So for a break higher, it will be a move of about 132 points on top of the upper rising wedge trend line. For a move lower, it will be a move of about 67 points off of the lower wedge trend line when that's broken, which is some way below, currently at 41.53. Now the qualification for a rising wedge pattern is a minimum of 5 touches on both trend lines combined. There is no maximum number. So we can still drop down to the lower rising wedge trend line and even then bounce back up. For your information, this wedge collapses to a singularity just after the end of August. I thought all this important enough to spend some time upon it, so please just keep all of this in mind. I will be away for the next 2 weeks on annual leave, and I will apprise you of the moves and outcomes when I get back. I'm happy to share my videos, various charts, and answer any questions with anyone who is interested. And with that, I'll finish this section from London and hope you found these comments useful.